Welcome back. Hope you're having a pleasant morning. Well, we've listed on all the top stocks for you. Now let's get into some fundamental analysis. And to help us out with that, we have Gurmeet Chadha from Complete Circle who joins us on the show. Hi, Gurmeet. Good morning. I think it's been a while since we had you on the morning show, but good to have you in, Gurmeet. Tell us, how are you approaching the markets right now, and particularly the metals pack. I want to focus on Vedanta. It's not the one for the faint-hearted, as I always say. But Mr. Agarwal now is looking at giving out some dividend. The guesstimate is that he should give 8 to 10 rupees, which will be par for the course, which will take care of his funding needs as well. But your view on Vedanta, if at all, or otherwise, what you're playing from the metal space?
Good morning, Nigel. Always good to connect, especially early morning. So metals have always been a tactical play for us. We've never taken a long exposure because that's the very nature of the sector. So we have been nibbling with Hindalco and Tata Steel in and out. Vedanta obviously has done pretty well for a year, almost 100% kind of return with an excellent dividend yield. I think the dividend play makes it attractive, but for reasons beyond others, we avoid this particular stock. We do have a positive view if China comes back. There's a lot of stimulus getting announced, and then there is valuation comfort. We have a special situation in the portfolio in name of Mukand, where now Bajaj Group owns 74%. This is now being run by the Neeraj Bajaj family. They have reduced debt. The market cap is still around 2,000 odd crores, and they further aim to monetize more land parcels in Thane. A lot of discussions happening with few data centers that could infuse between 800 to 1,000 crores, and that can have a straight away impact of 80 to 100 crores on EBIT. So that's one play we have. Other than that, as I said, any news on stimulus, any sharp correction, we keep nibbling between Hindalco, Tata Steel, and a few other names.
Gurmeet, good morning. I was just, stocks tend to move so fast nowadays, right? I was just thinking about Greaves Cotton, for example. Stock didn't do anything for a long time, right? You could have been holding it for years, and then it moves up the way it did over the last 1 week. So it's impossible to do just-in-time investing. But I don't know. It's the price moves are very fast, 30-40%, and you're done. And then by the time just your thoughts on that, and of course, any other picks like Mukund that you spoke about. Go on.
No, I agree, Prashant, and that's why I said markets rotate. Look at what has happened to IT stocks in last 3-4 months. People have written off IT, that AI will take away IT services, and just see the movement there. So, and that's why it's important to have low correlation. We often focus on returns, but you have to be a risk manager, especially in times like this, because markets rotate very quickly. So I agree with Greaves Cotton. I think it's, one reason it was subdued was that they lost market share in the two-wheeler space. They became the fifth player at 3.5%. Now, with Ampere new model, I think there's a hope that they might come back to 9-10%. And then there is this, IPO of the mobility business. It's been a transition for them from a, let's say, a pure engineering play to a mobility and tech play. That's what market lives and gives you re-rating. The three-wheeler number also might do well with launch of Electra, and they did one acquisition, almost 4 billion, which was Excel, which was again in the engine vertical. So my sense is if they can demonstrate this with not only just with value unlocking, but more with numbers, especially in terms of gaining market share, I think that will help. Coming to our point, we like this space. We took position, and to your point, how stocks move quickly. We got into precision camshaft, where the bread and butter business is camshaft. The overseas subsidiaries are not doing well, and they have this EMOS, which is basically retrofitting, where you convert diesel vehicles to electric vehicles. You can convert something like, let's say, a Tata Ace to electric vehicle at about 7-8 lakhs, right? And the new Tata Ace will cost you like 13-14 lakhs. Recently, Telangana government allowed retrofitting as part of the EV subsidy, which means your road tax and registrations are free, and they just secured an order of 5,000 odd vehicles. And suddenly the stock has gone up like 60-70%, in a month. So I think a portfolio like EV and energy, you got to be patient and let the story play out, because there's a lot of regulatory interventions, a lot of unlocking which happen. And we are playing this particular, if I call EV, as a space through Precision, through Tata Motors, and now with M&M. I think whatever little I've heard, I've spoken to a lot of dealers. I think the model they surely have a winner at hand with the new electric model they've launched.
So you own, Gurmeet, hi, morning. So you own both Tata Motors and also M&M?
Yes, we do. Because,
Okay.
Tata Motors we nibbled because, there's been a healthy correction so in the price. I think we have very good models lined up this year on domestic side with EV versions of Harrier, Safari. JLR should see a bit of a bounce back next year. It's been on news for all the wrong reasons in terms of rebranding, etc. They've genuinely reduced debt, started generating free cash flows. So that we added with this 25-30% correction. M&M, we've been there for a while, not just for the but it was very reasonable a couple of years back. And I think they're now getting their capital allocation strategy right. They've cut down on loss-making JVs, clear focus on three segments. SUV share is back at 20%. Tractors, they are gaining market share. Actually, increased guidance for this year, which is augurs well for economy as such. If tractor guidance can go up, and I think continues to do well. And I said I've done some review of this newly launched EV. I think they have a winner at hand.
That's interesting. So that's two of our very regular guests we feature on our shows. Two have now given a thumbs up to the new electric vehicles that M&M has given out. Gurmeet and of course Prakash the other day was saying that he's also equally impressed with what they've launched.
Near-term stress, but hopes of recovery. Gurmeet, what's your view on this consumption theme? The FMCG stocks, you're getting a lot of them at 20, 25, 30% discount in comparison to their 52-week highs. The problem is that growth is unlikely to pick up, maybe for the next few quarters. But have they come to those levels when you want to nibble in?
It's getting attractive, Nigel, after a long time. Look at HUL, it's down, hasn't done anything for almost 5 years. Tata Consumer has corrected 25-30%. Godrej, the entire re-rating which happened with Mr. Suresh joining in, probably seems to have disappeared with that guidance which came in. But you got to differentiate here. Maybe the food business will see a more recovery because that's where the consumption has fallen less in BPC, which is beauty and personal care. I think you might see a little bit of change in consumption pattern also. So you got to differentiate that. I think some of the companies are doing a smart thing. They're also reducing grammage. So while they do price hikes, they also reduce grammage so that the impact is minimal and has an impact, doesn't impact their margins. In fact, the margins do better. And if rural recovery picks up, the guys with slightly more rural reach would be the first to bounce. Maybe something like an Imami or Dabur also hasn't done anything. So our picks in this space is largely Tata Consumer and IDC. But we are looking at new spaces. But I also think the consumption pattern is changing. A lot of these FMCG companies are not reflecting that. A lot of that is getting played through new age platforms like the Zomatos and Swiggies of the world. And also the digital consumption is going up. Today, if in your personal balance sheet, the second biggest line item is your digital rent. Your Wi-Fi, your mobile bill, OTT subscriptions, health apps, news apps. And I think that has to get reflected in the portfolio more as far as the consumption portfolio goes.
Speaking of consumption patterns, Gurmeet, we can feel the Delhi winter. There are two former Delhiites here in the studio, right? I was seeing you in your jacket and all. You can sense that the chill is setting in.
It's a rarity. I'm in minority today.
But speaking of consumption patterns, what about the new issue, Vishal Mega Mart? It's a brand that a lot of us who are from North India, we've been very, very familiar with. We've seen the expansion firsthand, right? And now they're coming to the market. What do you think? If you want to allocate some money to retail, would it go to Vishal Mega Mart?
I would probably prefer another 10-15% drop in trend to get into it. We actually entered and got out a little early. I think that's one regret we have. But it has corrected a little bit, and if we can get more better entry points, I will. The mass retail business is tough. The inventory losses will be very high. We've seen that with even Manyavar also. Very seasonal. You have to manage your inventory well, working capital is well. I think what Trent has done has demonstrated some amazing metrics on that count. Literally adding a store, almost every third, fourth day now. So my preference is there. And other names, if you see like likes of Shopper Stock, etc., it's a very tough business to be in a age which is now becoming more e-commerce and more digital, because the cost and overheads keep going up. So you got to be more focused, in my view, on e-commerce platforms than have a pure retail play, unless that guy is really replicating it, superbly and having a nice hybrid model. So I would still prefer trend in this space, and hope that even if Avenue Supermart corrects a little more, happy to dribble into that as well.
All right, Gurmeet, stay with us. Interesting thoughts there. What we're going to do is we're going to take a quick commercial break here. Nothing on the sort of GIFT Nifty, right? Still about, a 5-odd point downtick. So it's absolutely flat, at least index change that it's being indicated. We'll take a break here. We come back with, of course, technical trading ideas. Sudarshan and Shilpa Raut are our guests today. So we'll do that and, of course, continue chatting on markets as well.